check in with the crypto markets with some of our experts here. We've got BlockFi Global Head of Institutional Distribution, David Olsson, as well as Genesis Trading Head of Derivatives, Joshua Lim. Hello, Joshua. Hello, Dave. Thanks for joining us.
Hi. Thanks for having me on.
So we're seeing Bitcoin and the crypto markets, well, Bitcoin in particular, within a very short trading range between 29 to 32,000. What's happening? Where do you see Bitcoin headed? Maybe we could start with you, David.
Sure, yeah. So Bitcoin has been in this channel for a while. BlockFi has both retail customers and institutional clients. Retail has been for sale. So predominantly they've been selling every crypto across the board, but the institutions have been coming into buying in big size. And that points to obviously where the smart money is and is a contrarian indication. We've also seen some fund flows overseas with offshore ETFs, which is great. Inflows coming into those instruments as well. So I think hedge funds hunt in packs. The trade has been long Bitcoin, short alts. And we've seen a lot of demand for coins in our platform for those institutions borrowing altcoins and then shorting them and going long Bitcoin. And so it looks like Bitcoin dominance will continue to grow, but that's the statistic to look at from our point of view.
David, I just want to follow up real quickly on a point you made though, because that's a little bit counterintuitive, because one of the narratives is that, institutions like kind of fueled the rise and now they're sort of accelerating the crash, but you're saying it's the opposite. You're saying that institutions are seeing this as a buying opportunity.
They haven't pulled back at all. So since the May 9th event with Terra UST, we've seen our lending revenues increase 40%. Overall, we've originated new loans with 25% of the client base, so they're deploying. They're not pulling back. They're definitely deploying into the market. And we've increased our trading revenues 130% in May, year over year. So business has actually never been better. Now that the volatility has died down a little bit, we'll see what the next trade is, but it's definitely, from our standpoint, institutions coming in to support the market.
So short alts, long Bitcoin, pretty consistent with like a bear market pattern. I don't know, Josh, maybe you could weigh in. Like, what's the signal that we're moving toward a different momentum direction? What are you watching at the desk at Genesis?
Yeah, absolutely. I think there's basically a couple of charts that we're paying very close attention to. One is the ETH BTC ratio cross. So that's obviously been under a lot of pressure lately. Most of it is because, this is a very crowded trade. It's a very popular trade for a lot of people to be positioned long Ethereum going into the merge later this year. Obviously, there's been some signs of success recently with the Robson testnet. I think that a lot of folks were caught early and long in this trade, and we've seen a lot of people kind of switch over from being long ETH kind of on a spot trade and switching it over to implementing it via options. There's a lot of attractive structures. If you go out, December or even March of next year, buying call spreads versus selling puts, that's like a pretty common trade now. And we're seeing that reflected in kind of like the supply of volatility in the back end of the curve, so sort of long-dated options are for sale. There's a lot of people trying to extract that kind of yield from the market now that DeFi and sort of just yield farming in general has declined in popularity post-Terra, obviously.
So ETH2 momentum kind of building. If that continues, does it fire up another alt season, or does it spell the death of a bunch of L1s that maybe aren't so relevant anymore?
Yeah, I mean, I think you kind of have to separate like Bitcoin and ETH and majors from just the broader long tail of altcoins. There is sort of an awareness now in the community that there's a lot of supply, right? It's very onerous, like some of these sort of inflation schedules for the mid-cap range of tokens. And so it's a lot easier to own things like Ethereum, where going to the merge, there actually needs to be sort of like net buying to kind of or a reduction of supply. And Bitcoin obviously has a very reliable schedule, whereas with these altcoins, a lot of them are now unlocking. There's a lot of VCs sort of like taking profits at this point. So that's kind of the main difference. You got to separate the majors from the altcoins.
I wonder if you could tell us a bit about the spread between institutional investors as well as retail. Obviously, we're at Money Reimagined, the summit, where there are a lot of institutional investors. So what are you hearing? Are they starting to put money in? And if so, in what? And how are they playing the field right now?
Yeah, I think institutions are very cautious right now. And part of it is, we've we're going through this sort of cycle where the Fed is pulling liquidity out of the markets, right? And the primary focus for a lot of firms now, having already de-risked their crypto portfolios, is sort of in the wreckage of other risk assets, equities, large cap tech. Where can they find value? They're going to deploy there first before they rotate back into crypto. So the way it's going to work is probably equities is going to sort of stabilize and floor and rally, and then that'll take Bitcoin along, and then you'll see sort of ETH and other alts follow.
So if you obviously nobody has a crystal ball, but when do you think we're going to see the bottom of this market? If you had to guess.
There's a lot of people love making analogies to the .com bubble, and if you go back that far, it sort of can be a year or 2 years of sort of a lot of selling, sort of de-risking, people sort of adjusting to the new environment, and obviously now we're in a world where with high inflation and sort of like low growth, that's a very potent combination that we haven't really seen before. So it's very hard to say, but I think it does take a long time to kind of work out of like some of the excesses that have happened over the last 2 years.
Definitely. David, I want to put a last question to you here. In terms of like this kind of past cycle, DeFi, very much a prominent part of that. We saw a lot of innovation in the DEX category, but at the same time, centralized exchanges really were the beneficiaries, right? The fastest growers, and most of the liquidity is there. What are you looking at in the next cycle from the DEX side of things as a centralized exchange? What are the innovations there that maybe you're watching closely as a potential competitive thing that could take away liquidity and users?
I think the reality is I still believe, and BlockFi still believes, that what's good for the ecosystem is also good for BlockFi. The next, and a lot of what's been talked about in the market is GameFi. So the DEXs, obviously, we've got sort of some of the major DEXs have already been established. Uniswap was a first mover. There's some other AMMs across different chains. But I don't think you're going to see new entrants come in and do anything that's radically different from what's already been done. So I think that the next innovation and the next adoption that'll drive users into the space and people into the space is going to be something different. So it'll be different than NFTs. And my personal view is that's GameFi, things like StepN and other...
love StepN. It's not working on my network, but I love it. They're having little issues.
So I hate to give a shout out, but I'm a personal... Okay.
All right.
Anyway, so
David.
but I think obviously that's the biggest use case so far for Web3. So.